But let's move on and talk to one more management now. UFlex reported its earnings a couple of days ago. The stock saw a big up move of 10% yesterday. Today it is sitting with a gain of around 3.5%. We are now joined by the management of the company, Mr. Bhatia, to tell us in terms of how the business is shaping up, how was Q3 and how does the overall outlook look going forward. Hi sir, good afternoon. Thank you so much for speaking with ET now. First up, let me talk to you about the big problem that the entire industry is facing, and that is the margin pressure on account of the increase in crude prices as well as raw material prices. What is your outlook regarding the same, and where do you see the margins stabilizing?
So I think the margins have been pretty good. Yes, the raw material prices have gone up, and that is reflected actually in the margins looking skewed. But if you negate the impact of the raw material price hikes, and if the things were to return to the normal, I think the margins in the range of 18 to 20% sounds good for the overall health of the industry. And that's what the industry will be hoping for, that in the medium to long run they can maintain those margins. That's pretty well for us actually, because the margins as compared to a pure play packaging films companies are a bit low because of the packaging business, which as of now continues to be a low margin business. But in the packaging film side, the margins are pretty good, and we've seen the expansion happening in this quarter itself, and for the margins despite the volume. So if you see our value increase in this quarter is about 65%, but our volume increase is 38% only, which means that the rest of that has come from the price hikes, a part of which will offset the cost. So cost increases also for us, which were about 5 to 7% kind of a range for this quarter.
Right. So, you supply to a lot of players that directly get, impacted by the reopen, the packaging that they do because of that. But now with increased cautiousness towards, packaging, how things have to be delivered, are you seeing a sustained increased demand across the board?
I think, yes, the e-commerce has, resulted in an increased demand for packaging, both for our kind of packaging as well as for the external packaging. Like you see those card boxes, you see a lot of things wrapped in bubble wraps for safety. So yes, the e-commerce has a definite impact on the consumption of the packaging across the world. So there's no doubt about that.
If I remembered correctly, you were also talking about a couple of capacities which were expected to come on board in Sanand as well as Karnataka and Dubai, and there was an aseptic plant, packaging plant also that you were looking at operationalizing soon. What's the timeline for those, and what kind of revenue contribution can we expect?
So I think we likely to commission that aseptic packaging increase capacity sooner than what we had anticipated. I think in all probability, we're trying to postpone in this quarter itself. But, there are issues like, travel issues for the COVID, for the various equipment and technology suppliers. So we're trying to organize that. But, we are more or less there to, start this. Same is the case for our plant in Dubai as well as India. India BOPET plant actually comes in Q3. We're trying to postpone to Q2, but, still, again, that is a bit time to go. But these two, CPP in Dubai, CPP in India, and aseptic packaging are very close to completing those plants. In terms of their revenue potential, Dharwad full plant has an annual revenue potential of about 800 crores. Aseptic packaging has an annual revenue potential of about 500 crores and about 200 crores coming from the Dubai CPP facility. So that's what in total 8 plus 5 plus 2 is about 1,500 the revenue potential from these plants, which we're looking to achieve in the year FY24, because FY23 will not be the full year of operationalizing these facilities.
just in terms of e-commerce demand as well as shelf demand that you're directly seeing from the companies, what is the sense that you get? You think that the company will be able to manufacture and cater the demand, or it may take some time before both the growth impact starts to come on the company?
What the plants that we commissioned in the last, I would say about 12 to 15 months, happy to say that, the capacity utilization levels in those plants have been pretty high. And probably when we conceived those, we would have thought of a longer time frame in terms to reach a full capacity utilization levels. But aided by the pandemic and the increased demand for the flexible packaging, we've achieved that much faster. Except for the Nigeria plant, which is operating at about 60% capacity, all other 4 facilities that we set up are today operating at 95% plus utilization levels. So from here on, there is some scope in the existing capacities to go beyond even the designated capacity of 100% as we normally do in all our plants, with a little bit of tweak of engineering and all that. So there is some utilization available there, but new capacities in Dharwad, Dubai, and Sanand will add more significantly to our top line and bottom line in the next couple of years. That is what I will say. And as and when we feel that which are the growing areas. So packaging certainly is less of an investment focus because the margins are pretty skewed. So we'll have to look to the packaging films or aseptic packaging. These are the other 2 businesses we do in terms of seeing the value growth. The aseptic packaging per se has been
right, sir. Really short on time. Otherwise, we would have liked to continue that discussion. Congratulations on a great set of numbers and hope to see you once again.